Ladies and gentlemen of the crypto space, we're live on a Wednesday, May 7th at 10:35 p.m. Listen, when the time is right, the time is right. And I got to get some content out. I didn't get content out on Monday. I got to get it out on a Wednesday night. It is what it is. It's good content. So let's get some good content out there. Let's talk about these markets. Let's figure out where all your heads are at. I know where my head's at. And we got to make sure everyone's heads are cool, calm, and collected as the markets look good. I mean, it's not like we have lower highs and lower lows and we're trending towards like $60,000. We're at 98,782. What's the bullish backdrop? Most people are talking about Fed and no cut and no dovish tone. Meanwhile, for the entirety of 2025, we've been talking about the bullish backdrop, the legislation, the positive vibes, the cool tone, the change of rhetoric from the administration, from Treasury, even from the Federal Reserve. Not related to interest rates, but their talking points. It's been all good things all year. So are we supposed to be surprised that the market's doing well and not going down? No, we're not. We're not surprised. This is what we've expected. And we've known for a long time now what the assets are that we're supposed to own because we've been talking about this going 3+ years, longer than that, but at least 3 years since 22. And Terra Luna carved a little bit of callousness into our hearts and taught us so many things about ourselves and about investing and malinvestment, clearly. But it's been 3 years that we've been talking about how to engage with these insane markets. So nobody that listens to me should be unprepared or unexpecting of markets to be doing well. In a year where $7.5 trillion needs to be refinanced, another 2.5 in deficit spending, $10 trillion needs to come out of Treasury. What's that going to do to the global currency supply? And this comes back to macro talk, which we're not going to digress into necessarily. The distinction between money and currency, with treasuries being money and dollars and other currencies being currency. And the mechanic, the functional way that money prints currency. And who prints currency? Of course, the markets look good. There's more money on the planet than ever. Therefore, there's more capacity for there to be more currency in the planet ever. Therefore, there's more potential for the prices of shit to be higher and the inflation in the crypto markets to go up. Everyone talks about consumer price inflation. I want to talk about crypto price inflation. Make crypto out of reach. I don't know. Literally, that's what everyone complains about. They complain about the price of eggs, but oh, if all of a sudden Bitcoin is $200,000 and it doubled in price. If eggs go from $2 to $4, people were like, "Oh my God, it went up in price." But if Bitcoin doubles in price, everyone's like, "Oh my God, it doubled in price." You realize the hypocrisy in that? I mean, obviously, food is a consumable, but I don't think people realize that they're happy when one thing goes up in price and not happy when another thing goes up in price. And it gets even more complicated with real estate. Everyone wants, all the young people want real estate to go down in price so they can afford a property, and all the older people want it to go up in price. So I don't know. I've always found that fascinating. Um, how it's hypocrisy, but we're all guilty of it until we better understand that we all do it and what it really means. Bitcoin at 98, 6, 700. That's crazy for a Wednesday night. Curve at 70 cents. These are lovely numbers to see. It's certainly a way calm one's mind, relax, and not have anything to say about price action in the markets? I mean, from a weekly perspective on the CRV USD, we're way past 1 year's bottoming process with this larger inverse head and shoulders, and then we have this little micro inverse head and shoulders spanning a fair amount of weeks. Got to be a solid 2.5, 3 months right there. And that was a retest from our 200 SMA on the weekly, holding as resistance. So this is clearly not like 100 SMA on the weekly holding as support. Did anything hold as support? I mean, not really. It's mostly just level support, maybe. I mean, not even on the short-term time frames. I mean, these were clear breaches of the 100, 200. That was just downtrend. Maybe if we go to the monthly, no, not even the. Oh well. I mean, look at that. The monthly 10. I mean, you wick through and you got candle body closes below. But that's pretty interesting. This is probably the most constructive perspective to have is the monthly chart curve. That's crazy. That you had massive candles below the monthly 10 and candle body closes below, but still, basically 1 month closed below. This closed above. Look, closed above the monthly 10. So I had to close below by what? A cup of 3 cents, 2 cents, close above, close above. Big wicks below. This is actually the most constructive perspective to have on curve. Go figure. The monthly 10. 50 up above. Okay. Can you say anything bad about that chart? Chart actually looks really good. Go figure. The weekly chart gives you more granularity because you could clearly see uh, the larger inverse head and shoulders and then the smaller inverse head and shoulders and nice price action along this level, especially these levels down below. You're not going to get back down here. I don't need that anymore. But there's a nice level right here at 36. Confluence right here, support right here, and then it goes all the way back to obviously December 20. Um, nice support here and support as well at the bottom one. So these are two very interesting levels that we're well off of. 36 compared to 70, you're 100% to the upside of those levels. 98,668. Wow. Um, I don't have much. If you guys have anything on your minds, I'm more than happy to talk about anything. The only thing I noticed today was Michael Saylor talking, Bitcoin for Corporations keynote. I liked it. My 2 cents is um, his perspective is very interesting. I appreciate it, and I share and I understand what he's talking about. And you know, if you have enough capital. And if you're a corporation, I mean, clearly it's a no-brainer. I mean, are you going to outperform the S&P? The way he talks about zombie companies and the way he talks about just the overwhelming majority, like 88% of corporations are not going to outperform the S&P. So what the fuck are you doing? He's certainly not going to outperform the Magnificent Seven. So what's happening is you just have this tremendous concentration of capital and people only want to invest in things that are actually outperforming, which leaves the vast majority of the investment landscape to be shit investments. So the vast majority of equities are shit investments, and the only ones that are going to outperform are the same ones that everyone else is going to buy. And it's the boring trade. It's the consensus trade. He talks about that a lot. What's consensus versus what is truly, or at least not consensus. And he literally just talks about Bitcoin being not consensus. There we talk about the things that we talk about in crypto fintech and the five businesses of crypto. There's only five businesses of crypto. that very even fewer people talk about. There's even less consensus. So I like when he talks, and when he talks, I apply it to the way I think and the things that I talk about, and I'm like, oh, that's cool. Yeah. So if we take Bitcoin as the consensus trade across from a crypto perspective, and crypto fintech is the non-consensus trade, that just means it's even more of a tantalizing place to allocate capital to build a structured portfolio between cash and investments. And that, I don't know, I get excited about that shit. I get excited about understanding what the majority, not even the majority, what the majority in crypto do not. Like 99% of people in crypto are allocated on Coinbase and Kraken and centralized exchanges and have no concept of anything other than buy token. Ooh, 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 token go up in price. I buy low, sell high. Ooh, hodl. It's very caveman type of investment mentality as compared to, the bifurcation of a portfolio between cash and investments and the key criteria of investments being rule number three and having three primary rules for investing or at least asset management in the portfolio. Um, so I get a kick out of knowing or seeing what most don't. And that's most in the crypto space. So dare we take that small subset of humanity and realize how microscopic it is in the context of the entire planet and the investing population of the planet that continues to pile their capital into overpriced pig shit boomer meme coins in equities markets and 401ks that are going to absolutely do nothing for them. There's literally no mathematical capacity to retire. Like in 30 years in a 401k, oh, it went up 10x on the money. Oh, shit. Woo! Hot dog, it went up 10x on the money. Yeah, because 10x on the money is going to get you to where you, not where you want to be, but it's going to do something different for you, meaningful for your life. No, it does shit for your life. It does nothing. A 401k, it has no potential. There's no mathematical potential for it to achieve what anyone really wants. And the result of good investing produces what people want. So clearly that means 401ks are not good investing. No, that's default. That's fallback. That's like regression proof. That's like graceful degradation. Oh, I'm going to fall back to doing the same shit that every person in this stupid country does, which is boring AF. Don't be boring. Dare to be a little bit different. If you're a little bit different, you achieve a little bit different of results. So I like this here. I'll put this in the chat. I brought it up because it was Saylor doing what Saylor does best. But I like when he talks corporate. I'm not fond of strategy. I don't own MicroStrategy. I don't own any of that. Uh, Bitcoin, sure, but pure Bitcoin, or maybe something wrapped on crypto fintech land, be it TBTC, WBTC, EBTC, whatever Frax is cooking up. I don't know, but Bitcoin belongs to the cash part of the portfolio, in my opinion. And that's my definition. Now you'll have people out there that clearly talk about Bitcoin as an investment. I don't, but that's my point. Everyone has to define it's kind of like when you see legal documents. If you haven't seen my legal documents, every once in a while we show them and talk about them. You have a definition section because words, you have a general consensus of a definition, but there's also subjectivity in language. So the semantics, the meaning of words are important. So if you're going to talk about something, you might as well define what you're talking about. And clearly, you should generally be consistent with the consensus definition of things. It's like, I'm not going to define pink as blue. You know what I'm saying? But the point is, you can define investing, you can define cash, you can define money, currency, value, stuff like that. So I do. So I don't define Bitcoin as an investment. That's me. You're all welcome to do whatever y'all welcome to do. Whether you like my idea or not, it's another story. But I don't define it as an investment. I like it as a cash, meaning I could spend it. I like it as a collateral, meaning I could borrow against it. Do I like to borrow against it? No. But can I borrow against it? Yes. Do I like to spend Bitcoin? No. But can I spend Bitcoin? Yes. Do I like to acquire Bitcoin? Rule number one, own more assets. Just so happens as you get more advanced with capital management, you don't just own cash assets, you own investment assets. And your portfolio becomes bifurcated between cash and investments. And I define investments with a specific attribute, rule number three. If anyone can put rule number three in the chat, they will get a big captain thumbs up for a Wednesday night. Rule number three is very important. It's also my pinned tweet, pinned X post for quite a many years at this point. So that's my definitions. My definitions bring me comfort, they bring me understanding, and they bring me capacity to be consistent. So, but while folks may say like, days go by, weeks go by, and my opinion isn't adjusting. Of course, my opinion isn't adjusting. I expect what I have created and crafted in portfolio form to play out between now and 2028, 2029. Most of the time, I'm thinking a couple of years into the future. The best investors on the planet are thinking about 12 to 18 months into the future. You know, I take it a little bit further because I have a very long term perspective and I have the emotional capacity to let that amount of time play out. Isn't that our greatest art? How much emotional capacity do we have? How much stress, frustration, anxiety can we withstand? How resilient are we as an individual? How many times do your kids walk into the bedroom in the middle of the night? Two, three, four, 5 in the morning. Do you have to get up at 5, 6 o'clock in the morning to go to work? And what's your demeanor? Are you cool and calm and relaxed? Are things handled, things managed, or are things overwhelming and difficult? You'd be surprised how connected all of these things I talk about are: demeanor, emotions, anxiety, frustration with regard to children, parenting, education, investing, work, commuting to work. I vividly remember I used to work in New York City for about 8 years, and I lived on Long Island. I would take the Long Island Railroad to Jamaica, swap lines, head to Penn, jump on the 139 downtown, not uptown, from Penn. I used to work in Penn Station. That's another story. One Penn Plaza. That was crazy. That was a heck of a commute. Um, but I remember that being, well, in One Penn Plaza that was actually my second job. Jesus. My second job was in One Penn Plaza, and that was I would go to the Port Washington line. There's literally like an express line, 35 minutes. So none of my stories are going to compare to that commute because that was 35 minutes. I did not know what I had when I did that commute. I was spoiled. But toward the end of my New York City tenure, about an hour and 50 minutes, 2 hours each way, with swap in Jamaica. during the winter season and they had the blow torches on the tracks. My goodness. And I vividly remember my frustrations and how difficult it was. And I did it day in, day out. It was close to 3.5, 4 hours a day commuting, which is literally 50% of what I spent at work, 8 hours. I don't know. I did it. I was young. I was in late 20s, 28 to 36, 35, 36, give or take. I don't know, 5, 6, 7. Yeah, somewhere around there. Those that age, and I was so in hindsight, I remember the emotion. Nowadays, you know, obviously, didn't have a I didn't feel well on Monday. That's the reason I didn't stream on Monday. But the reason I didn't stream today, earlier today in the afternoon, was because I was at the office. And my commute to the office is an hour and 20-minute drive. I don't go in much. But when I do, I have to drive. Most of the time, I work at home, which I'm grateful for nowadays, given my commute history. Point being, the hour and 20-minute drive, I all too often think about my historic commuting and how frustrated I was. And nowadays, I'm not. Yeah, yeah, it still sucks. An hour and 20-minute drive. I well, just work at home. I could do the same thing. I do the same thing at home. I am more productive at home. I am healthier at home. All right, so fine. The same thoughts are there, but I don't have the same emotion when I'm driving. I'm just like, all right. I put on some music. I put on glasses and I relax and I'm good. I'm calm. I think about that often, that difference in emotion. Whether that comes with age, whether that comes with experience, all that experience with investing, or experience with children, relationship, my wife, parenting, I don't know. But I think about that difference in that emotional response often because that difference in emotional response that I had between commuting when I was younger in my career to New York City versus now is the same difference I have with regard to capital management or even thinking about capital and management thereof. The way I thought about capital in 2020 is very different than currently. I mean, damn, you got to learn. Everything is, maybe that's what it is. Everything is an opportunity to learn. And our biggest failure is if we don't learn something from each experience. So if you spend 2020 and 2021 doing insane things, irrational processes of capital management that produce potentially positive economic results, but they weren't sustainable activities or they were volatile activities, quick trading, fast transactions, excessive transactions, too many transactions. Is that sustainable? No. So hopefully, 3, 4, 5 years later, you've learned from those past experiences. And that's kind of like my story of my commute when I was younger and my commute now. I've learned from my past experiences. So please everyone do yourself a favor and remind yourself to learn from the shit that you've been through. 98.7. Because, ladies and gentlemen, it's 2025. At some point, at some point we're going to look back and 5 years are going to be pass and it's 2030 and crypto fintech is monetized to the tune of trillions of dollars and it's a significant component of global financials. And you're going to wish you spent 2024 to 2026 calm with a plan, having learned from 2020 to 2024. Take a step back if you're frustrated. Take a step back if you have anxiety. And if you don't know what you're doing, ask questions on social media. And then you have to determine what's good answers to questions. So maybe you could ask questions here. Or better yet, the most appropriate place to ask questions, of which it's a dwindling population, is on the captain's Discord. It's literally free. Do I have the free one? Yet there's no one there anymore. I find myself just constantly. I don't even have the free one here. I don't even know if I keep the free one open. I might have it blocked. But the paid one is here. $10 a week. And then you can ask your questions. I don't know. I'm not making it free because then it gets to all the spam in the world. I've had free Telegram and it was just an absolute disaster. So the point is, everyone does things ass backwards. The market gets crazy and people start asking questions because that's exactly what happened in like 2021. The market was crazy in 2020, and this Discord, this very popular in 2021. There were like hundreds and hundreds of subscribers at one point, $10 a pop. Um, but that's not the case. Now there's very few. But guess what? You know who the few are? The few are the folks that have made decent decisions over the last years. And I'm not saying they made the same decisions I made. I'm just saying we've all made decent decisions. You are not a good investor unless you look back over 2023, 2024, and just the past years and have something to say about the choices you made. That's what makes you a good investor. You realize that? That's the contrarian perspective or the different perspective that matters. It's not how much money you make, whether you can introspect, you can be critical of yourself, and you can learn from your past experiences. Anyhow, the advisor in the house, good morning. Much a pleasure, my friend. Mix. Yes, indeedy. Late stream today, Cap. How are you doing? Shoulders looking, tone and neck. Depends on the shirt. I've retained my muscle over the years. I've been doing cardio and I still do my sauna. I love my sauna. I mean, we're talking like 5 to 7 days a week, 200 degrees, 30, 40 minutes. I'm really pushing it to go an hour. Depends. Be healthy, everyone. It means everything. I wasn't healthy over the past couple of days and I have to remind myself to be extra healthy when I think everything's normal. Everyone should. Anyhow, so good evening. Much a pleasure. Everything is good with everything you're working on, as always. Mix. Try commuting from Greenport, 3.5 hours with limited trains because it was so far. Ooh, no, I can't. 3.5 hours each way? No, that's not a job. That's what the hell, dude? I mean, you're almost spending as much time commuting as you are working. Oh my! I mean, listen, there's a part of me that will always be what I was in my 20s, which was I do it. You, there is no excuse for weakness. You execute. You know what I'm saying? I'm not being critical of anything you have or have not done. I'm saying with regard to my personality. I will get my ass in my car and I will do pizza delivery and I will be damn good at it. And then I'll get a side hustle at CVS and I'll definitely print photos on the side or something. Do a little hustle. I'm just saying, there's always a hustle. There's always a job. There's always a way to make ends meet. And I would commute if I needed to. And I wouldn't hesitate for a second if I needed to do whatever the hell I needed to do to take care of my family. Oh, I'm grateful I don't. And there'd probably be some serious extenuating circumstances because I'm pretty sure I could go on LinkedIn and get a job in like 45 minutes still nowadays. AI still can't do what the captain does. I mean, it's really weird. I mean, there is no entry level for Android. There's no entry level for iOS anymore. Not with AI. Every once in a while, I sit in the sauna with a bunch of kids, college kids, and and I'm like, we end up talking about prospects and what's potentially going to play out as we get into the 2030s. And it's a trip. I don't know because I know in my industry, when I was younger, I always knew that you needed just one or two devs per project, and you could build the project in certain ways. You could architect it and like build modular components and have one or two devs per modular component. That requires a heck of an architect, like the captain, to build something like that, just so you can break down a project into modular components, or you could literally have just one or two devs run the entire project. I don't know. Old school folks would call them ninjas, folks that just live and breathe coding. What the hell do you need? A team of engineers. So it's like all you need is like one, two engineers per mobile product. If you build it right, if they build it right, you can manage the entire product. I mean, right now I'm basically managing the entire product for my company. And not that I wouldn't appreciate my partner back who's been doing Dart and Flutter. I would very much appreciate her back because I'm doing all this shit by myself, which it's good and bad. I'm OCD. I like my code, and that's every programmer. But I wouldn't mind doing less of it and sharing the burden of writing this code. I don't know. That's the biggest catch 22. Every developer wants to own their code, and then when it comes to sharing their code, they're like, "Don't touch my code," and everyone gets so territorial. And I don't know. Too many cooks in the kitchen don't work. Too few cooks in the kitchen, and you get overwhelmed. Software is an interesting industry, not just with regard to the profession, with regard to the psychology of interacting with your peers, the management, product team, design team, so on and so forth. Anyhow, Assume, good evening. Much a pleasure. Mix, I tried that at 45. Well, I'm, I have no idea what the hell is going to come for me. I have no expectation for the future, even though I do have a sense of what the portfolio will be. I, I, um, I generally I hope for things to be good, my health to be good, my healthy, live your life healthy, wealthy, and wise. I would hope those things are baked in the cake for myself over the coming years. Just fingers. That's all I can do. Late night cap, Brian is in the house. Much a pleasure. Do the creators of Curve get paid and there's a team to manage anything? Yes, with stake. So Michael owns how many Curve? Here, you can look it up. Michael got obviously liquidated in 23 and 24. So, but my 2 cents, he did that on purpose, meaning you can't have too much concentrate. He needed to get rid of it. And he couldn't sell it because if he sells it, that's worse than getting liquidated. I mean, which one is it? If you sell it, you're malicious and you're dumping on your project. So if it was me, the appropriate thing to do was to get liquidated, call it a day. So if you go to DeFi Wars and you go to Curve, Mike has 26 mil Curve. So Michael gets paid. He's got 26 mil. He's getting paid. That's a lot of dollars on the weekly. Last week, here, let's we could estimate voting flows, Dex. Dashboard. I think last week was like $400 for myself, and I got like 1.4, 1.5 mil. This week, Wednesday, yeah, it was like $400, $300. So he's got was it 27? 1.5. What? No, 20. Yeah, 26.5. Here, calculator. 26.5 divided by 1.5, give or take. He's got 17.66 times me, and that's like, let's say I made $400. So last week he made 7 grand. That's pretty good. That's a pretty good week. And that was just literally in CRV USD. So and obviously the Dow has curve because those were the votes we did in late 24, 25. You're talking about how the Dow gets paid. So they own curve, and I think they're getting, so they get, we all share in the cash flow of the protocol, the CRV USD, which is base VECRV, which is basically um, oh, this it's more than it's only a couple of percent, so it's lower than risk-free rate of return at this point. But this, I don't know if this is literally here. If we go here, and we go, oh, that's cool. Thanks. It's nice. Can we go to classic? Go to classic. I think it still shows classic. Oh, I missed this. I missed this website. Yeah, all right. It is 1.23%. All right. So for 1.23%, Michael makes 7 grand a week, and the Dow makes more, or whatever. I don't know. I don't know how much curve the Dow has. But there's thousands there, and you can imagine there's 414,000. I mean, this is the split of the revenue. Thousands for a week. So he's sure he's just fine. And that's what, listen, he's building the most incredible software. The most, what's the most recent project thing that he built for impermanent loss? Um, oh wait, yield basis. So this is the most recent stuff. This is literally just going to improve the amount of cash flow that goes to VECRV. And listen, Michael said exactly that. He literally said exactly that. He's like, okay, I no longer have Curve because he got his, however, 100 mil or whatever it was, Curve liquidated. He needed to distribute it and get it off his books. Otherwise, you have a concentration of ownership, and nobody fucking wants to invest in something where one person owns everything. And he couldn't sell it because then he'd be the founder that dumped on everyone. So y'all understand how simple this equation is? He needed to get liquidated. Um, So with that kind of revenue, all I would do is literally sit back and program the most awesome shit in the world. To do what? To boost the amount of business this protocol can do so I can make more money, which benefits everyone. And that's the whole point of a DAO. It's the whole point of all this crypto. Everyone's contributing, especially himself, especially the folks on the team, which was stake. Most remarkable, um, I don't know, grassroots, crowdsourced development. Anyone could be an owner. It's kind of like what everyone used to think corporations and stocks should have been. Anyone could be an owner. You buy 20, 30 mil worth of curve, you're making like 6, 7, 8 grand a week. And that's now. What happens when you have good times? Right now, it's relatively, uh, uh, it's a relative period of austerity. What happens when there's like 10 mil a week in revenue? And instead of uh, 7 grand a week, Mitch is making 70 grand a week. And and 20 even so as I invest in Curve as well, and I expect my number to be reasonable in the future as well because of their work. And they have a reason to do their work. So I very much appreciate the reality of what of cash flow that comes into this crypto business, of which there's only five crypto businesses, and this happens to be one of them, which is foreign exchange, credit, derivative, liquidity financing, and liability printing, of which Curve is all of them. I left the city. Oh, for a week. You went for the week with the 3.5 hour trip. All right. That's nice. But yeah, yeah. Okay. I understand now, after the fact, what you were saying, considering what I was saying. And I put it all together and I'm like, all right, I just talked about the wrong shit for about 10, 15 minutes, but it was still interesting nonetheless. Yeah, I know it's pretty late. I'm going to wrap things up. I won't be on Friday and take some healthy, wealthy, wise, personal time. Make sure I'm the best I can be for myself and my family. In the meantime, stay rational. Be good to yourselves. Be good to your family. Be calm. Sit in a damn sauna. Listen to some solfeggios. The frequencies that keep you relaxed. Find your peace. Let time pass because these markets look lovely. And I would really like to come back at some point when you're blowing past all-time highs. 110, 110, and curves blowing past the 200 SMA in the weekly. 118 to 150s, and then you get up to here, the $3. This is all. Where are things heading? Are things heading down? Are things turning off? Once you turn on some shit, can you turn it off? Can you stuff Pandora back in the box? Pandora's not going back in the box. The only question here is time. For the only possible or reasonable way to think is how cheap you could have bought the stuff. That was the only equation. That's why Buffett was the best. He stacked cash and he bought stuff cheap, hostile takeover territory. Wednesday, May 7th at 11:18 p.m. Thank you all for joining me today. 179 people made it to the end of the stream and are now a little bit more rational because of it. I wish you all a good one, and I will see you guys and gals after the weekend. Until then, peace.